This is a bit of a rerun with a kind of an acceleration. Evercore estimating, I know, I don't mean to cite your rivals, but estimating about 17% overall tariffs. Overall, just give us a quick look. Is this really meaningful for the transports industry, or is the freight going to move no matter what? I was actually talking to the CEO of C.H. Robinson. He seems to think the freight's going to move either way.
Yeah. Good morning, Frank. Happy holidays. And you're right. Absolutely. The freight will move. And given the scale of tariffs, you might have some of it move early. We might see some pre-shipping if we start loading that up, like we saw last time. There's going to be a rush to get some freight early. Then you build it up, and then you have a kind of period of malaise where you kind of soften that freight. We've been in a freight recession for 2.5 years. So anything that, if we start getting growth and more higher demand, that's really the key that we want to take away from this. So tariffs will move it around. We might get some pre-shipping, and that's going to affect the flows.
All right, so you put out a note a couple weeks ago, and you were looking at the transport sector in general. So you were mostly upgrading stocks in the transport sector, but it was very important to note when it came to companies in the quote-unquote freight brokerage business and the global forwarding business, basically you move freight from places like China to the U.S., other countries, you actually lowered your price targets on those names. We're talking about C.H. Robinson, Expeditors, RXO, a company we have on the show quite a bit. What does this mean for those names? Why are you lowering the price target on them, but just about everything else you raise the price target?
Well, it's a factor of when you look at the brokers, if we're going to start seeing higher demand and more freight moving, spot rates are going to go up. And in trucking, like I just said, we've been in a freight recession for 2.5 years. We've seen this in 2012, 2015, 2019, but this is 2.5 years we're into this. If we finally see that demand going up and spot prices going up, the brokers tend to get a little bit of a squeeze. And so for a brief period, you're going to see a little bit of a squeeze, and that's why that shift. So we're moving more toward the asset carriers if we see that demand move up.
But why wouldn't tariffs help them? I mean, it's a disruption potentially. People have to find different ways to move their freight. Isn't that generally a tailwind for them?
Well, yeah, I mean, we're bullish on some of the names you mentioned and have buys. And so we kind of highlight that disruption is helpful for a near-term period, especially when you have tariffs that get implemented and you need to move freight that quickly. When you're looking long-term, though, in the immediate move of raising rates, their margins get squeezed in that initial part, and then you got to readjust.
What about the possibility of another strike at the East and Gulf Coast ports? Kind of tense negotiations there. They have certainly not made a lot of headway there. Both sides releasing statements about automation. Obviously, the union saying they're against it. The port operators saying how important it is.
Yeah, no, this is something we absolutely is not resolved, right? We thought it was resolved a couple weeks ago when they pushed it off to January. You thought, okay, we've done the wages and we're good, but this automation is a real issue. And so you've got to get that resolved in order to get the freight flowing. You're going to see another pre-shipping that's starting to shift out west. We're starting to see the Western carriers, the Western rails start to benefit from that. The stores, the warehousing is starting to build up in anticipation of not only tariffs, but also the potential for another East Coast strike.
Can I ask you about one other area? Less than truckload truckers. They get about 2/3 of their volume from manufacturing, from industrials. You upgraded them. You gave them some of the biggest price target increases. But when you look at how they've been moving, it hasn't really reflected the idea that tariffs are going to boost their volumes and manufacturing is going to be increased here in the U.S. What's going on there? That's
more about the future of growth, right? If we start getting policies, deregulation, lower tax rates, things that are going to encourage manufacturing domestically. Again, as you just mentioned, 2/3 of the freight is manufacturing. That's going to really boost demand for those less than truckload carriers, and that can see those benefit.